2, 1.
Welcome to Made for More Living.
One small step for man.
With Johnny Jennings.
Kick the tires and light the fires, Big Daddy.
The fastest and most exciting hour of news, events, and real estate in Northern California.
And this is a fact that was proved.
Powered by eXp Realty. Online at madeformoreliving.com.
Does everybody know what time it is?
Get ready. Here we go.
So today on the show, we have an incredible guest. She's going to be talking about a topic that is just absolutely riveting and that people cannot wait to talk about. Like, this is hotter than AI. It's hotter than stocks, bonds, tariffs.
I'm not sure if you're being sarcastic or you're being genuine.
We are going to be talking about credit repair.
Nice.
Who doesn't want to talk about credit repair?
That's right.
No, but on the show today,
everybody has credit, right? Whether it's good, bad, or ugly.
Good, bad, ugly, or no credit. You're somewhere on the spectrum.
Right.
Right. And so with us today is Sarah Perkins with Blue Water Credit. Thank you for being on the show, Sarah.
Yes, thank you for having me.
I love that name, Blue Water Credit. It's just so peaceful.
It's
calming.
very calming.
Because obviously, especially if you have bad credit, it's a very anxious, fearful, worried, stressful time on somebody. It's just this load that they carry, and it's constantly on their mind every day.
And it impacts their lives. Like, can I get a car? Can I rent? Can I buy a house?
Right.
Job.
Can I get a job? Right. And so it is definitely a heavy load.
Yeah. And so for you to come along with Blue Water Credit, it's just so peaceful.
Hey, Jeff's a marketing genius.
If you like.
No. But what I want to talk about too is like, what's your, I've always thought, why do we need a credit repair company? Because it does cost for your services. We'll get into that later. But what's really the benefit? Why don't I just pay down my credit cards and move towards building a stronger credit that way? Like why would I want to hire a Blue Water Credit? Because there's also a lot of charlatans out there. Like I've heard horror stories. So Sarah, what's your take on that?
So my take is, knowing how a credit score is made up, it's very complicated. So it's more than just paying down your credit cards. There's factors like your payment history, having a good mix of credit, applying for new credit, the length of time that you've had your cards open. And then there's so many different scoring models out there. So first, it's very complicated.
Okay.
And so
it's not as simple as I think it is.
No. So one of the biggest factors is credit utilization. So that is your balances compared to your limit. So obviously, if you can pay those down, that's going to have a positive impact, but that's only going to get you to a certain point. So then you have Blue Water Credit that deals with payment history errors, or just even bad payment history if you missed a payment, late payment, charge-off collections. And then we work with the credit bureaus, dispute those items, and then in attempts to get them removed permanently. And that is the biggest factor in a credit score, your payment history. So any time that we can get any of those items permanently removed, that's definitely going to positively impact your score.
Okay, so on my end, I'm working on making sure my cards are paid, like making sure my bills are paid regularly, maybe paying them down strategically.
Correct.
But then on the Blue Water side, you're also helping build that or rebuild that credit history, the payment.
Correct. So our program is obviously built on people that do have some negative payment history. So if you haven't missed a credit card payment, you're probably not someone that's for our program. So you're going to work with your credit coach on what accounts to pay off, what accounts maybe you need to open, getting a new installment loan. And then we are going to do the disputing of those negative items through methods online, faxing, phone call, using statute and law to get these things removed. Because there are people out there that will just throw I don't know what this account is, it's fraud. And when you open an investigation with the bureaus, they do have to remove that item and put it in a dispute status for 30 days. So it can falsely give someone a credit score that's not accurate, because then as soon as they determine that it's not fraud, then that item goes right back on. And so people are getting taken advantage of because they're thinking their credit goes up with these people that say fraud. And then really it just goes back to where it was.
But that's not what you guys are doing. Like,
No.
that's just so we're clear, that is what 99% of the air quotes credit repair companies are doing.
Yes.
Is they're saying, hey, they're promising a quick fix.
Yes.
But they're actually costing you money and actually damaging you in the long run.
Correct.
You shared a story, I think, of a friend of yours that had
Yes.
gone through this process. Like, a friend of yours, she knows you,
Yes.
and yet she used somebody else.
Yes. And so what she did is she paid, first of all, a lot of money up front, which is illegal to do in credit repair. I'll go over the pricing and how we have to operate and we have to perform a service before we can even collect any money. But she paid a lot of money up front. Granted, this gentleman made her credit look impeccable. It looked clean because he used the fraud tactic, and some of the things stuck and they didn't come back. But what she didn't realize is those accounts still had balances. They still were within the statute of limitation in California where she could get sued. And then she had a process server knock at her door a couple months later, and she's getting sued for this debt and now has 2 judgments against her. So on paper, she looks very pretty because her credit score is immaculate because these accounts are gone, but it doesn't absolve you of the debts if you still owe them is the thing. So we're upfront and honest with our clients. Hey, you're going to probably need to pay this one off, or it's going to come back onto your credit, or you can run into the problem of being sued and having a judgment against you.
Yeah, I mean, it sounds nice. Hey, just pay me some money and the problem goes away.
Yes.
But sometimes if it sounds too good to be true, it often is. So when somebody is interviewing credit repair companies,
Yes.
what should they be looking for? Like, what makes Blue Water different?
Okay. Yeah. So first and foremost, with credit repair, you need to be at least licensed with the DOJ. So you can go onto the DOJ's website and plug in that credit repair company's name or that person's name, make sure that they are actually licensed with them. And then you have to be bonded. And then there's rules and regulations that go along with the fees that we charge. So like I mentioned, you can't charge for anything up front unless a small enrollment fee to cover admin costs. And then it's like a monthly fee to cover the work that we've already performed. So we'll charge an upfront enrollment fee and then perform, a month's worth of disputes and then bill in arrears. And so there's regulations on how we can collect that money.
Got it. And so it just sounds like it's a highly regulated industry, but there's so many bad actors out there.
Yes.
Like why are there so many, why are there so many people behaving fraudulently if there's all these rules?
Well, I think it's because you get these just people out there on like TikTok and Instagram, and they're giving like the flashy advice like, hey, your debt was sold. They don't technically own the Bank of America debt. Don't pay it. Use my templated letter. And then they're just sending out these, PDF forms for people to send these things into the mail themselves. So they're technically kind of not doing the credit repair. They're doing like a do-it-yourself. So there's like this little gray area there, but there's so much bad information, and they're just going for the flashy quick fix. Like you said, people don't want to pay these things off, or maybe they just don't want to deal with looking at how much they owe and what they need to do. And the rebuilding process takes time, and our dispute process does take time. Not anything is an overnight fix, unfortunately.
That's a great point. So people are probably listening, wondering, okay, how long does it take, like legitimately, to start rebuilding my credit? So the lowest home loan credit score I'm aware of, where you can get like a decent loan, is around 580. How long does it take to get somebody who has challenged credit up to where they can now start qualifying for a home?
Yeah. So every situation is obviously
I know, they're all
different.
Yeah. But you guys have served how many people? Like thousands, right?
Over 15,000. So we've been around since 2008, and we've served well over 15,000 clients. And but it is a process. So the dispute process in and of itself, we have to issue a dispute to the bureaus, and they have up to 30 to 45 days to respond to us. So some of it is making sure we're strategically doing the disputes and using statute and law that will, garner effective results where they'll get removed. And then if they don't get removed and they come back and say, no, this is valid, then we would maybe try a different dispute method. So we usually tell people you have to give it at least a minimum of probably like 45, 90 days doing like a round or two of disputes.
Okay.
And again, it depends on how many accounts we're trying to get removed. I've had clients that just have like a one-off collection from like Comcast that pops up. And sometimes we can do where we go straight into TransUnion, and then we have portal access, and we've gotten things removed overnight, but it's very, limited situations. But I usually tell people average 4 to 6 months that people are in our program. The industry average for everybody else is like 13 to 18 months.
Yikes.
Yeah.
And they're probably just stretching that process out, charging them fees.
Yes. So even though they might be lower monthly than us, their goal is probably to keep somebody in the program as long as possible. They might be just doing one account or one bureau at a time, where we are like throwing everything at everything, like every single account, every single bureau. We're trying every single tactic. And so our goal is to get you back to your lender as quickly as possible. I mean, a majority of our clients come from a referral from a loan officer or a real estate agent. So our goal, our goal is to get them back to you guys as quickly as possible, because we want to get them in a home loan. And not everybody's looking for the perfect credit score. If you tell me, hey, my client only needs a 580, we're going to do the work to where we get them to where we think they're at the 580, hand them back to you so you can get them in that loan. And if they want to keep going on with the program to further improve their credit to refinance later, great.
That's perfect. And that's a good point. Because not only if it takes 12, 13 months, are the fees starting to add up, but also think about if you're renting and you're wanting to live in a home, now how many thousands of dollars additional are you contributing towards rent? Home prices have been appreciating over the last 15 years or so. How much, if you were to buy a house in 6 months versus a year, how much money did you save on equity? Like all those costs they're not like hard, like in your bank account, like you can see the digits change costs, but they are things to consider when you're trying to pick the best financial option for your family.
Yeah, I mean, it's an investment, but usually it's an investment that pays off by having to pay less in fees, like upfront costs for buying your home because of your credit score or the interest rate that you get. So
the better the interest rate, the lower the monthly.
So usually you can make up that money pretty quickly, once you get secured in a home loan, the money that you would spend rebuilding your credit.
I love that, the investment aspect of it, because people are willing to invest in their health, they're willing to invest in a home, they're willing to invest in school, but how about in your financial health?
Yes.
So because it's part of your profile, it's part of who you are, just like the different characteristics of whatever your life is.
Unless you're Dave Ramsey, then you just don't have a credit score.
Well, that's right. I'm curious. Let's talk to her in the next segment about what her perspective is as far as Dave Ramsey saying we shouldn't take out any loans, we shouldn't have any credit whatsoever. I'd love to get your thoughts on that.
Absolutely.
Yes, selling your home can be a long, complicated process, but it doesn't have to be, especially when you work with Johnny Jennings and his amazing team at Made for More Realty. Listen to this. How about selling your home fast and for the most amount of money without doing any showings or organizing or costly repairs? That's right. He'll get you at least 3 cash offers on your home in as-is condition. And all you have to do is Google Johnny Jennings and his team at Made for More Realty and get more for your home, like so many people in the Roseville area have done. In fact, making Johnny Jennings the #1 team in Roseville for the past 3 years. Maybe that's why they have over 1,000 5-star Google reviews. Don't believe me? Go check them out for yourself. Again, just Google Johnny Jennings with Made for More Realty and get more for your home.
This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
So we're in the studio today with Sarah Perkins with Blue Water Credit. I feel like I have to say it slow. Blue Water Credit.
Blue Water Credit.
And we're talking about, obviously, credit repair, but Dave Ramsey.
Do you ever listen to the Dave Ramsey show? It's like the #1 radio show in America.
Really?
Yes.
It is, yes. And so do you ever listen to his show?
Oh, I do.
Because he kind of does what you do. Would you agree?
I mean, yeah, it's financial credit advice. So it's just from a different perspective that I think different goals.
What do you think about the advice he gives to listeners who call in and say, hey, I'm in debt, I'm having this kind of problem? What do you think about the advice he gives people?
How do you see it through your credit repair lens?
So, I mean, it's financially sound advice as far as getting out of debt and not being over your head in payments. I understand that perspective, but if you're trying to get a loan or any kind of traditional financing, you have to play the credit game, unfortunately. So, to develop a credit score, you have to have, a certain number of revolving credit cards open. They ideally want an installment loan, like an auto loan or a student loan, and then a mortgage. And so, again,
so let's break that down.
Yes.
About how many credit cards is suggested?
So with FICO, and that's the main player in the game still right now. They still do about 90% of the lending decisions.
They're changing though, right? Isn't there?
They
a new
are
one?
changing. So they are going to be going to Advantage 4.0, which is your Credit Karma score that people see.
Okay.
And a FICO 10T. It was actually supposed to go live fall of this year, but it got a little bit more pushback. What they're doing is they are using these new scoring models and applying it to loans over the last 30 years and seeing if these people would have gotten the financing based on like the new scoring models so that they can test it out. So they need a little bit more time for that. But right now it's still FICO. For mortgages, it's your versions 5, 4, and 2 if you want to be really specific.
Okay.
But now I'm forgetting what the question was.
How many credit cards?
Oh, credit cards,
Yeah.
yes. So according to FICO, they want anywhere from 1 to 5 revolving credit cards open. And that's like your Visa, MasterCards, your retail store cards where you have a credit limit. You can...
Your Mervin's credit card.
Yeah,
Mervin's. I was like, Mervin's? Oh, my
Back in the
God.
day, everybody had a Mervin's
I had a Mervin's
card.
credit card.
See, look at that.
There you go.
What if you still have a Mervin's credit card? Does that still count?
Yeah, absolutely. I think you're in trouble if you still have a Mervin's credit
Okay.
card.
You're still making payments on it?
Yeah, if you're still, you could be making payments on it. Very true. So yeah, 1 to 5 revolving credit cards open, and ideally keeping those balances at 10% or less of the limit is what they're
10%.
10%. So I know that a lot of people say 30%
That's
out
what
there.
I've heard, yeah.
What the 30% is when you go over 30%, then they penalize you. But the lower you can get it down, you can earn some extra points. So we usually tell our clients between 0 and 10% is where you want to keep those balances.
So let's say you have one credit card.
Okay.
The limit is, we'll say 10 grand.
Mm-hmm.
And now, and you have 3 grand on it, right? Or $3,500. You're over that 30% threshold.
Yes.
Would it be better for you to open up 2 additional cards and put 1,000 on each of those?
So it depends. If you don't have the money, that is definitely a good option. But when you apply for new credit and open new credit cards, then you are affecting how long it's been open since you opened a credit card, which can drive your score down, and then the average length that your cards have been open. So they want to see an average about 6 years when they take all your credit cards and see how long they've been open. They want it 6 years. So if you've only had that one card with the $10,000 limit for, let's just say 10 years, but then you open a brand new card, now you just sliced it in half. And then if you open another card after that.
Oh,
then,
the average across all of them.
yeah,
Got
so
it.
you might be dinging yourself with points there, but if you can lower your utilization, you might gain it back plus more. So that's one of the things that we'll go over with them while they're in their program and making strategic decisions like that. But some people just don't have the money to pay down their credit card, so that is a good option. So yeah, so 1 to 5 credit cards, 10% limit, and then you're looking at one installment loan, which can be your auto loan, a student loan, a debt consolidation loan, something where you take it out for a certain amount of money, you have a fixed payment, and you pay it off.
What about like a phone? Like if you buy an iPhone, would that count as an installment loan?
It depends on if they report it to your credit. So a lot of those things, like I see Affirm and those payment plan kind of models, and they'll only report to one of the bureaus, and so you're not getting the credit for it across all 3 bureaus.
Okay.
But yeah, and then that's one of the things why Dave Ramsey, going back to him, paying your car off, paying these loans off, which again sounds financially responsible, but then you pay your only installment loan off. Now you've lost that mix of credit, and now you've actually lowered your credit score. So we'll get people coming to us all the time. Hey, I paid off my car loan. Why did my credit score go down? And it's because they lost that mix of credit. Again, it depends on, hey, if you need to qualify for a loan and you can't have that car payment, that's different. And so if your lender's telling you need to pay it off because otherwise your debt to income ratio is too high, then we have other avenues of credit builder loans that look like a loan that go on your credit, but you're actually paying into a savings account that kind of trick the system, that make it look like you have an installment loan. So there are some creative ways around it, but paying everything off and closing it, you're going to lose a credit score. So if you don't have any activity for 6 months or more, even if the accounts are open and you're not using them, your credit score can literally disappear. So I'll get lenders.
That's his goal, right?
Yeah.
Yeah. I mean, so I tried the Dave Ramsey thing, all cash, debit only, and I know what he says. about, hey, it's the same safety as a credit card. Like there's all these protections, do manual underwriting for home loans. But in terms of like just quality of life, like I didn't want to figure all that stuff out.
Yeah, you don't have to worry about that when you go out to buy a car. Or again, like employment background checks. They look at credit all the time for certain kind of jobs. So if you don't have a credit profile, they're going to be like, what's going on? And so it's giving these places.
I'm Reacher.
Yeah.
That's why I don't have a credit profile. I'm off the grid. Have you seen that show, Reacher?
Yes.
I love that show.
Yes.
So,
But yeah, so I mean, your credit profile is basically telling somebody a story of how responsible you are. Can you take out a debt and pay it back responsibly? And so it's showing behavior trends, and so that's why it's used for employment background checks, and why car loans and auto loans and mortgages, that they look at those kind of things.
And yeah, so I totally agree with you on that. Definitely have healthy credit. I think what Dave Ramsey is essentially getting at is, I mean, if I was a divorce attorney, I would probably say never get married, because I'm constantly dealing with people who are getting divorces. He's constantly hearing stories of people who mismanaged money through credit cards or other, consumer debt things.
Yes.
And so he's looking at it through that paradigm. But yeah, I don't know. Maybe a healthy balance.
Yes.
So tell us about the experience when someone first talks to you guys and they're feeling overwhelmed and stressed. What's that feeling like? And then after so many weeks or months and you're able to get them to where they're breathing above water, right? And they see some light at the end of the tunnel. Tell us that whole experience from an emotional standpoint.
Absolutely. So, yeah, we know that dealing with credit and finances, it can be stressful, especially when you're feeling overwhelmed, you don't have a plan. Most people just don't even want to look at their credit or open their bank account. I used to be one of those people, way back, 20 years ago. And so we understand.
So did Jeff.
Yes.
Right,
that's how he started. I mean,
Yeah.
he got turned down for a bank account and said, what's going on? And
What am I doing here?
yeah, and looked into building his own credit, and then started doing it for friends, and then it just turned into a business. But that's what we understand when they come to us. So first and foremost, they do a consultation with our credit advisor. We're going to go over their credit report. We're going to be understanding of their situation, ask questions. What's your goal? Are you trying to buy a home? Some people just come for general cleanup. So we're going to go over their whole financial picture and just offer them a solution. I think some of these people are just so overwhelmed that they just don't know where to start. Credit can be very confusing. Like I mentioned, there's different components on how to build a credit score, and then there's all this misinformation out there. Pay off your credit cards, close them down, don't get credit, like Dave Ramsey said. And so you're hearing all these different things where you're dealing with professionals at Blue Water Credit. We've all been in this industry for 10 plus years. We're watching the trends. We're telling you, pay these ones off. Don't necessarily spend the money and pay these off. You're not going to get a benefit from it, because a lot of people have that understanding. Hey, I paid off this collection. Why isn't it deleted on my credit report? Well, just because you pay something off doesn't mean that the negative mark that you got from it disappears. Yeah, there's companies out there that will do a pay for delete, but I think it's a common misconception that, hey, I paid off this credit card and closed it. It's still there. Well, those things can stay there still for 7 years.
Wow. And is that one of the services that you can help?
Yes.
Like clean up if it wasn't filed correctly or whatever?
Yeah, so once something's paid off, then that's when we would try our dispute process, as opposed to we do negotiations where I work with somebody's creditors or the collection agencies to kind of barter a deal like, hey, we'll pay you this amount of money, and you'll also include a deletion off their credit report. Give me a deletion letter that I can then turn around and give you to give to your lender. So you're not waiting the 30, 60 days for the credit report to update and reflect that. A lot of lenders out there can take that deletion letter and do a rapid rescore. And
I was hoping you'd bring that up. What is a rapid rescore?
So that's being able to submit the letter, and almost then they kind of run a credit report as if that item wasn't on there. So you get credit for that item being removed essentially on that deletion letter, and it garners a new credit score as if they ran credit that day and it wasn't there. But we know the credit bureaus can take 30 to 60 days to actually fully delete those items.
So it's just like, hey, this is what your credit's going to look like in the next 30 to 60 days, and then they can help get you pre-approved based off that
Yeah,
rejected.
My understanding is that you can use that deletion letter and then use maybe whatever underwriting system they have to be able to run the credit based on that item not being there. Even though it's still technically there right now, they can submit it and get that item either removed immediately or getting a snapshot of the credit score accurately as if that item wasn't there.
And so I've heard of lenders doing this, like their buyers right on the bubble, like right on the cusp of being able to qualify.
Mm-hmm.
They'll just tweak a couple of things, do the rapid rescore, and then they're good to go. So that's another tool. You can always reach out to a lender or reach out to Blue Water Credit,
Yes.
and they can help you with that. But I was literally talking to somebody last night about this. We do a first-time homebuyer webinar.
Yes.
On average, every 2 weeks, maybe once a month. And somebody was shocked. She didn't know that there was a difference between a soft pull and a hard pull. And she wasn't aware of how many times you can actually have a pull done on your credit within 30 days. Do you mind going over what that looks like?
Yeah. So, you're talking about the inquiry. So, there's a couple different inquiries out there. So, a soft pull is typically, a lender has the ability to do that where it doesn't take a hit on your credit report. It doesn't show as an inquiry that's going to impact your score. So,
which is huge. People are freaked out about that.
Yes.
It's like, people just do a soft pull. It won't impact your credit at all.
Yes.
Yeah.
And my understanding, though, is you can't use a soft pull credit to be able to fully underwrite them and
Correct.
qualify them for a loan, but it gives you a pretty accurate view of where they're at credit score
Better than
wise.
Credit Karma or whatever your credit card thing says.
Correct.
Yeah.
And then anytime you pull your own credit, that doesn't affect your score. So if you have a hard pull, which is where a lender is pulling your credit with the end goal of, offering you a credit card or a loan, then it's considered a hard inquiry. And that can drop your score anywhere from 1 to 5 points
Per hard pull?
per hard pull. But there is that rate shop window. So with the mortgage credit score, my understanding is you can have your credit pulled within like the same industry as far as a mortgage or a lender pulling it within a 30-day period. You can have, 3 or 4 of them pull it, and it only counts as one inquiry. So you're only getting dinged once instead of every single time that lender pulls it. But
Yep.
it has to be within that window of a period.
30 days and for getting a home loan.
Yeah, and the same goes for like an auto loan. So you can shop around for like an auto loan again.
Okay.
So then it just dings you once if you're shopping for a better rate for getting a car within like that 30-day window too. So, but you can't do like an auto loan and then a mortgage, and those count as the same.
Yeah.
It has to be within the same industry.
Okay, that makes sense.
Yeah.
Yeah, but I mean, people are thinking like 1 to 5 points, 3 points. Like, that's not a big deal. But for some of these people, like who are right on the bubble of being able to qualify and not qualify, that's a big deal.
Yeah, it can make a huge difference. And then people ask me all the time, well, I'll get those promotional inquiries like where they've soft pulled their credit to offer an advertisement of like, hey, if you call in, we can possibly give you this credit card with this credit limit.
Mm-hmm.
That's a promotional inquiry, so you're not dinged for that. But I tell people a lot of times the best thing to do is to go to optoutprescreen.com. I don't know if you...
I haven't heard of this, no.
Yeah, so it's a website, and unfortunately, right now, the way the law is written, your information is sold when you have your credit ran. So it is then sent to all these different creditors or companies that then become predatory in lending, and that's why you get all those offers
I have
in the mail.
heard of this. JJ told me about this.
Yes. So it's a site that you go. It takes like 3 to 5 minutes. You put in like your name, social, date of birth, but then it opts you out from having your information sent everywhere. And this is really important when you go to apply for a home loan too. I've had a person that had their credit ran, and then literally within like 5 minutes, she's getting hundreds of calls
Yes.
from all these different companies because her information has been sold. And then you're confused, like, is this, my lender calling me? They're kind of tricking me, like...
They say they could do better than my lender. They say my
Yes.
lender's lying to me. They're planting seeds of doubt.
Yes.
And what's crazy about this, Sarah, is that now people are using AI.
Yes.
So as soon as that pull takes place, within microseconds,
Yeah.
an AI bot is calling these
Yep.
people. It sounds like a real live person.
Yes.
And they are selling them, their services.
Yes. So
So
go
what's that website where you can opt out?
So optoutprescreen.com.
Opt out pre-screen.
My understanding, it lasts for 5 years, so you do have to go on and renew it. You can opt back in anytime you want in case you want to get all those promotional offers. But I know that they're lobbying right now to have it be the reverse, where you have to opt in, like everybody should be automatically opt out. So I know that's one of the bills that they're trying to put forward in Congress right now.
I hope they would do that, because I talk to JJ Mack, lender extraordinaire, all the time, and he gets people pre-qualified. They pull the credit, they're ready to go, and then they get this deluge of scammers, for lack of a better term, and sometimes people take the bait, and then they go down this rabbit trail, and it's like not what they thought it was, and then they have to come back to them, and it just costs them a lot of time and money if they would have just, well, one more time, what was that website?
Optoutprescreen.com.
Optoutprescreen.com. Yeah. I mean, it's almost like a do not call list.
Correct. It is. It's like a do not call list for credit.
Yeah. Cool. All right. Well, thank you so much for being on the show today.
Yes.
If somebody wants to reach out, what is the best way for them to contact and take next steps with Blue Water?
Yeah, so you can always go to our website to request a consultation, which is just bluewatercredit.com, or you can call us at 916-315-9190. Again, our consultations are completely risk-free, no cost. We'll help you pull credit. If you don't have a current credit report, you'll spend about 15-30 minutes on the phone with our credit advisor, and you're going to leave that call having some kind of solution or plan, whether it be we're good for you and credit repair is a good fit. Maybe we just give you some advice on what you need to do on your own.
Yeah.
Maybe you need credit counseling or debt management, but you're going to leave knowing exactly what you need to do and kind of what the cost is. On average, we're about $199 per month for a single person.
Okay.
Average length of program, 4 to 6 months, but you can cancel at any time with a 30-day notice. Some people just need 30 days and they're in and out and back to their lender. So again, it's an investment. What you end up saving in the long run is going to be way more than what you spend with us.
And it doesn't cost anything up front to get this roadmap, to know
Correct.
exactly what to expect.
Correct.
Like, for example, we recently had a client who came to us. They were wanting to buy a house. They were living in an apartment. I think it was like 5 of them in like a 2-bedroom apartment. And the husband wanted, more space for his family. And the best they could do at the time was a mobile home. And so one of our agents was like, hey, you know what? Let's go through Blue Water. Let's build up your credit. Take a little extra time, but then you'll be able to have the real solution to your problem, like the real home you want. And they took, I think it was 4, maybe 5 months, and then they were able to qualify for a traditional 3-bedroom, 2-bath home.
Yeah.
Right?
We hear stories like that all the time, and it's, why we do what we do. It's gratifying to see people get into a home, especially when they've been told by everybody else, you'll never be able to qualify for a home loan. Lenders, they don't want to touch it because your credit's not good enough. It's not a no, it's just a not right now.
Not right now, exactly.
And so I encourage people. We have, hundreds of 5-star reviews across Google, Yelp, on Facebook of all these kind of stories that you can check out. Again, we've been around since 2008, helped over 15,000 clients. So I think we have an idea. We know what we're doing.
And they're legitimate. Don't go to TikTok. Don't get your credit repair from TikTok.
Correct.
Get it from Blue Water Credit. Thank you again, Sarah.
All right, thank you.
You have been looking forward to this for years. You've been planning and planning and planning. Finally, the day is coming where you can finally sell your home, retire, and move out of state. But now you're not sure if you can make that happen because you don't know if you can make the amount of money that you need to sell your home and move out of state and retire and enjoy those golden years. Well, have you reached out to Johnny Jennings with Made for More Realty? There's a reason why he's been #1 in Roseville for the past 3 years, why his team has over 5-star Google reviews. Give it a shot. He has proven time and time again that he can get the most money for your home in the fastest amount of time. Or maybe you just want a simple, easy process where he presents to you at least 3 cash offers on your home in as-is condition. No need to do showings, open houses, repairs, none of that. Just at least 3 cash offers on your home in as-is condition. So no matter what your situation, if you think it's complicated, trust the expert that has tons of experience, been doing this for a long time. Just Google Johnny Jennings with Made for More Realty and get more for your home.
This is Made for More Living with Johnny Jennings, powered by EXP Realty. Online at madeformoreliving.com.
So, Matt, homes are going up for sale in your neighborhood?
At least in my neighborhood.
And they didn't call me? Like, what are you doing, man?
Exactly. So we usually take a nightly walk with the kids, and we walk around the neighborhood. And just this week, we've noticed that there's at least 2, if not 3 homes that all of a sudden they've got signs in the yard and they're up for sale. And so, of course, like any curious neighbor, you pull out your phone and you pull up the website or the address and you look at the pictures, and we noticed, okay, no big upgrades per se, just basic, obviously not in need of major repairs, but in okay condition.
Yeah.
Right. And then we look at the prices, and they're, I would say, I don't know, a good percentage higher than what we thought a home like that would sell for.
Really?
Especially in the past. Because it seemed like...
Do you track the value at all? Or
no, but, well, sometimes, obviously, I go and see what homes are selling for.
Yeah.
You know, when especially...
Well, some people are like Realtor.com junkies. Like, they check it every week. Some people are like every couple of years.
Only if we see a home go up for sale in our neighborhood. Then we check. So, obviously, last summer, spring, when the market is hot, we go and we see homes for sale. And it seems like since at least last year, home prices have gone up. And just, you know, selling for more than we think they can get for that neighborhood. But maybe we're wrong. Maybe is the demand up than it has been in recent months, obviously, because the weather's better.
Yeah, so
more people shopping.
So what's happening right now is, and I know people want clarity, they want concrete, like black and white
We want
answers.
you to predict the future. Tell us, what is the maximum amount we can get?
Or what's going on right now.
How can we take the most advantage of the market?
But like traditionally, it was like supply, demand, interest rates kind of feathered in there,
Sure.
right, in terms of affordability. But now you have like this weird below normal supply. You have these crazy high interest rates.
So we are at below normal supply.
In terms of homes coming to the market, we're up about 30% ish year over year, but that's still below what was happening before COVID, before they dropped the interest rates down. Because what happened is, they dropped the interest rates down, everybody refied, and now they don't want to, like, literally just had this conversation the other night. Somebody doesn't want to sell their house because they don't want to give up their 2.5% interest rate.
Absolutely.
The mortgage they're in, even at 2.5%, is literally killing them. Like, it's a huge financial burden for them, but one party does not want to give up that interest rate because it's... Got it. So you have a lot of people. You have a lot of people like that are holding on to those interest rates, and they don't want to sell their home and then buy something else at a higher interest rate and then pay more for it.
So the people that are wanting to sell now, they're obviously they need to downsize or upgrade. It's a necessity right now, so they don't care about a higher interest rate than what they have right now. So, or maybe they're moving out of state and they're ready to retire.
Yeah. But typically it's a need. Like there's like a family need. Like they've put off making a move for maybe years now, and they just can't wait any longer. But as far as like home prices and in the market being weird, for example, we listed a house in the first week. We had over 50 private showings. That is insane.
That's crazy.
Over 50 individual parties booked an appointment.
Not an open house.
Not an open house. This seller did not even want to do an open house. Poor thing. Like she was just getting peppered for a week with all these private showings. And at the end of 6 days, we had only 2 offers on the table. So what that means to me, what I'm seeing when I'm looking at this is there's buyers out there, but in order for your house to stand out from the crowd, like you have to be competitive on price. And so what ended up happening with this person is she ended up getting a great offer, way more than she was hoping for, because she had a full market response. We drove all this traffic. We were able to create a bidding war and get her the price even more than what she wanted. But oftentimes what sellers are wanting to do is they're wanting to start high. They say, hey, my neighbor's house sold for X last year. My house should be worth more this year. And that maybe isn't the case. In my neighborhood right now, the neighborhood that I live in Roseville, 3 houses came to the market. None of them were with me, so I have to drive past these other people's for sale signs. But I did the same thing. I was like, okay, let's see what's going on. And I was thankful that seller did not come to me to list the house. For one of 2 reasons. One, either that homeowner is very unrealistic on what they think their house is worth, and they weren't listening to the realtor, or the realtor, air quotes, bought the listing.
Sure.
Told them what they wanted to hear. They interviewed 3 people. They said that they could get the most out of the house. The person went with that realtor, even though that price is unrealistic. So we recently sold a home in that same neighborhood. All these homes are priced $75,000 to $100,000 more than what the home that actually sold for in the neighborhood. And so when you're walking through your neighborhood, Matt, and you're seeing these house prices, I'm not so curious about what they're listed for.
Right.
I'm curious about what they sell for. And so, but people need that money. They need that equity to make that next move. So they're tempting the market. I was on a call last night with a different fella, and his realtor bought the listing. Whether it was malicious or just pure ignorance, he said it was worth probably about $75,000 more than they thought.
Yeah.
They listed it, then they did a $5,000 price adjustment, then another $5,000 price adjustment, and here we are 150 days later. The house still hasn't sold, and they haven't had a single offer on the house. So when it comes to pricing a home, right now getting the price correct is critical. It's better to price a home more aggressively than to overprice a home. And a lot of sellers do not want to hear that. I almost lost a listing. So before we go on the market, we actually pay for a local appraiser to do what's called a desktop appraisal. So they'll look at the photos, they'll look at the 3D tour, and then he will give us, because that 3D tour is accurate, down to a 1/16 of an inch. You can walk through the house virtually.
That's incredible.
Yeah, you can look up, down. You know the size of the room, so the appraiser doesn't have to measure the rooms. And he'll give us a desktop appraisal. I shared that desktop appraisal with the homeowner, and the homeowner said, absolutely not. We shouldn't even list it. We shouldn't even put it on the market then. And we had to work through that. We ended up getting him an offer within 24 hours of being live on the market. But that's just a challenging conversation to have right now with sellers. And so if you are considering selling your home, I would ask you, are you wanting somebody that's going to tell you what you want to hear, or are you going to tell somebody that's going to be honest with you? Because the last thing you want to do is end up 150, like this other family that's been on the market 150 days. Their life has been on hold. They've had a kid, right? They've had a job change. It's impacting extended family members who are helping them with this transition. Like it's a lot of strain on the family, all because that realtor was just unwilling to have an honest conversation with them up front.
So you mentioned a home that was up for sale and it had 50 private viewings and only 2 offers. Do buyers look at a home that's somewhat overpriced and just walk away? They don't try to negotiate or come in at a price that they can afford?
Good question. So there's 3 main levels. The lowest level, the ideal level of interest in a home is when you're getting showings and offers. The next level up, not so good, is when you're getting showings but no offers. So you're close. You're close in terms of price and condition, but not quite there. And then the worst is you're just getting no showings at all. The market has ignored you.
Oh, wow. Yeah.
And so what happens is we always encourage people to submit offers on the property. You never know what a seller's willing to take. I don't even know. A seller can tell me, hey, this is my bottom line. And then all of a sudden they change their mind and the bottom line moves. So, for example, another house, these are all separate examples. So we deal with a lot of people. We help a lot of people. We have another house listed, very, very low activity on it. I don't understand why. It's beautiful. It's gorgeous. There's nobody behind them. It's beautiful kitchen, like stunning home. And we had one guy say, hey, I'm willing to offer you, what is he, 80 grand less? And so I'm like, well, write it up, send it over. Let's start this dialogue. Let's start this conversation. They're saying they're not willing to go below the certain price. You're saying you're not willing to come above whatever your number is. Let's have a conversation about it. And just so often, I don't know what it is, but agents don't want to take the time to write it up, or buyers are embarrassed. But I literally cannot start the dialogue. I can't counter you. I can't negotiate with you if I don't have something to negotiate.
Yeah. It's true. I think that's good advice from a realtor, is to talk to their client and have a conversation, because I think that's a natural reaction for people, whether it's a home or anything else, some other purchase. If it just seems like it's way overpriced, you just kind of walk away because you're under the assumption that this person is just crazy and they're out of their mind. They're not reasonable.
They wouldn't accept my offer.
Yeah.
That's what's going through their mind. But man, that is where people get great deals. There are actually companies out there that if a home has been on the market longer than 100 days, it triggers something in their software to reach out to that listing agent.
Yeah.
And give them and present a low offer on the property, or air quotes low offer.
It'll be interesting. I'll give you an update on how these homes are selling, because again, my wife and I both think they are overpriced. And so it'll be interesting to see how things progress in the next 30 days. If we see those pending signs, or if we see a drop in price sign or something.
And you'll never know. And what's crazy too is I don't understand why it's taking buyers so long to make a decision. So that 50 offer or 50 showings home, we had 2 offers in 6 days. We ended up getting an additional like 3, maybe 5 offers after that. And it's like, your agent needs to be moving quicker than that, or you as the buyer need to be making decisions faster than that. Like have the conversation with your agent. Here are my wants, here are my needs. Does it work for my family? Don't wait, because if our seller had decided to take the earlier offers and not wait an additional week, it's very unusual that somebody does that. Very unusual. But she decided to wait an additional week. You could have missed out on the house, right? And so you need to have an agent that's going to move with speed and certainty and has your best interest in mind. And then if you do that, you can typically still get a great deal on a house. In fact, right now concessions are up. They're nearing record levels, like nationally, for what home sellers are willing to do to help the buyer afford the property. And it's just because there is more competition. High interest rates are definitely a challenge. Affordability is a challenge. And so sellers understand that. Like we recently got somebody into a home, like a first-time home buyer. They only paid $500. $500 out of pocket, that's all it cost them to buy this next property, to buy their first home, because the sellers were willing to give concessions to help cover closing costs. Mm-hmm. And then we married that up with a down payment assistance program, and now this person has a sustainable loan, a quality loan. It's not a predatory loan, and they were only out like $500.
I have a question, shifting topics just a bit. So my nephew, Nathan, he lives in Roseville. He's renting an apartment right now with his soon-to-be, hopefully, fiance. But they're thinking about purchasing a home, and he's got a great job. She's a teacher, and he has a tech job. Cool. And he was asking me questions about doing a conventional loan versus an FHA loan, because he sees that, well, a conventional loan, I won't have to pay insurance,
Mortgage
right?
insurance.
Mortgage insurance. Yeah. But then he's got to come up with the 20% down payment, right? Can you clarify maybe the advantages, the disadvantages of what someone, especially a first-time home buyer, young couple, what you would tell them?
Yeah. So first disclaimer, I'm not a loan officer. I don't play one on.
But you work with
on radio
them on a regular basis.
But I do. I just want to throw that disclaimer out there. So if your nephew wants like more, like a good loan officer will know what questions to ask that your nephew's not even thinking.
Right.
And so I would suggest he reach out to JJ Mack and he can help him out. But as far as the difference between FHA and conventional, and this is something we actually go over in our first-time homebuyer class, like the webinar we do regularly. FHA, they have they're more flexible on their debt-to-income ratio, so you can go like 43, sometimes like 49% of your debt-to-income. So if your income's $10,000 a month, you can get, and when you factor in your whatever you're paying to live, like your rent or your soon-to-be mortgage payment, that can get up to like $4,700, and you can still qualify for a home loan. With a conventional loan, it's lower than that. You can't push the debt-to-income that high, so you have to have like a lower household. Lower expenses. Mm-hmm. So that's one difference. Another difference is with the FHA loan, you can have a lower credit score. So compared to a conventional loan.
Right.
So with FHA, you can have a lower credit score, a higher debt to income ratio, and still qualify for a home loan. With conventional, it has to be a higher credit score and a lower debt to income. So more quality, like a more qualified buyer. And then as far as mortgage insurance, he's right. Like, I mean, he can't get rid of his mortgage insurance on his FHA loan as long as he has the FHA loan. If he refinanced into a conventional loan, like a 3%, 5% conventional loan, or excuse me, as soon as he has 20% equity, he could refinance into a conventional loan and get rid of that. You're still going to have the mortgage insurance as long as you have less than 20% equity. So whether you go FHA or conventional, the mortgage insurance will still be there. That makes sense?
Yeah. So
you can
how
do
much are you looking at for mortgage insurance?
It depends on the loan. Typically, it's a couple $100 a month. Yeah. And so, like FHA is 3.5% down. There are 3% conventional loan programs. So it's 0.5% less than the FHA program. So technically, it's less money to the table. You just have to be a more qualified buyer. For that 3%, there's a 5%, there's a 10%, and then there's the one everybody is familiar with, the 20% down.
So it seems somewhat complicated. A lot more questions have to be asked, obviously.
Yeah, so if anybody, whether it's your nephew or anybody, like just reach out to us and we'll just start a conversation. We don't pull your credit. We're not hard sales. Like literally, I was on a call last night with a guy and he's like asking me all these questions. I said, hey, whether you use me or not, here's what I would do. Whether you use me or not, here are the questions I would ask.
Right, good. Like that.
And so that's how we like to approach it. So if you have any questions, just go to madeformorerealty.com.
So what would be your advice for buyers and sellers in a quick 30 seconds? Buyers and sellers right now as we enter the end of spring.
Yeah, if you're a buyer, get clear on what it is you're looking for and move with speed and certainty, and don't be afraid to ask. Like, don't be afraid to ask, hey, can I get this? Can we come off on price?
Right.
Can you give me some closing costs? Like, the faster you move and the shorter those conversations are, the quicker those conversations are with sellers, the more likely you are to get what you want in a situation rather than taking days to respond. So don't be afraid to ask. And if you're a seller, my suggestion is price the home aggressively. You cannot underprice a home. You can overprice a home, but you cannot underprice a home. Get that out of your head that you're leaving money on the table. It is not happening. If you're working,
you can always say no.
You can always say no. And if you're working with a realtor who has a full market response marketing program like what we have, it's literally impossible to underprice a home.
Yes, selling your home can be a long, complicated process, but it doesn't have to be, especially when you work with Johnny Jennings and his amazing team at Made for More Realty. Listen to this. How about selling your home fast and for the most amount of money without doing any showings or organizing or costly repairs? That's right. He'll get you at least 3 cash offers on your home in as-is condition. And all you have to do is Google Johnny Jennings and his team at Made for More Realty and get more for your home, like so many people in the Roseville area have done. In fact, making Johnny Jennings the #1 team in Roseville for the past 3 years. Maybe that's why they have over 1,000 5-star Google reviews. Don't believe me? Go check them out for yourself. Again, just Google Johnny Jennings with Made for More Realty and get more for your home.